Hey guys, welcome to this week's Job with Jason. Here we are in mid-April. I hope this video finds you and your family being healthy. Hope you're doing well, staying away from the corona. Hope you're enjoying some much needed family time, okay? As I head into this past week, I had some really tough phone calls last week from past clients who'd either lost their job, had their hours cut. The economy is starting to feel the effects of the coronavirus. And so is the mortgage lending environment. So I wanted to lead you to this week's topic, which is the tightening down of lender guidelines as we go through this recession, if you will, due to the coronavirus, and different times, if you will. So just last week, Chase, which is the third largest lender in all of the U.S., announced that they are tightening all their lending guidelines for all new purchases, 700 minimum credit score, and also 20% down. That is a drastic change to 3% down or 5% down mortgage loan. So it's 700 minimum credit score, 20% down. They will not be the only big bank to follow. They're leading the way. And you'll see many of the other big banks doing that. Also, another bank came out and said, hey, you know what, we're gonna do verification of employments the day of closing. I do think you'll see that at most every bank out there. In fact, Cherry Creek just came up with a form that says, hey, you have not taken a deferment or forbearance, and you still have your job the day of closing as well too. So they all want to make sure that for the viability of the client, they don't want to put you in a bad situation, and also the bank if you're losing your job and buying a house. So that's happening. Also, Fannie Mae and Freddie Mac, they used to have income and asset documents were good for about 4 months. They've shortened that window down to 2 months, okay? So that to me is not a big drastic change, shortening down that 2 months, but it does cause some more work, and you need to be aware of it if you're buying a house. So I say all this, okay? I don't want you to think that the only loans out there is 20% down to 700 credit score, because it's not true. Here's what's happening. You have big banks like Chase, Wells Fargo, Bank of America, Quicken, big banks like that. And you also have privately held mortgage companies, okay? 40% of all privately held mortgage companies actually only sell their loans to Chase and Bank of America and Wells Fargo and companies like Quicken. So they do your loan and they sell it to them. The other 60% of privately held mortgage companies can actually bypass them and sell your loan straight to Fannie Mae or Freddie Mac or Ginnie Mae, which is FHA. So there will still be loose guidelines out there. It'll just be more important now than ever to understand who you're dealing with and what type of private mortgage company you have out there. So if you have any questions, let me know, but do expect it to tighten down. We are Fannie and we are Freddie Direct. We're also FHA and VA Direct as well too. So I'm not too worried about those 700 credit scores and 20% down. We'll still have a lot of flexibility, and you'll see Fannie Mae and Freddie Mac come in and have some new unique programs as well too. But do expect some changes. If you have any questions, just give me a call at 281-882-8888, and have a great week.